Yes, hey guys, just got my colorful crayons out and just highlighting what in fact BTC USD has done or succeeded in doing recently. So what is that little green level? Well, that was an upside setup that was to the left here. Whoopsie, let's take that off. To the left. And that was some time ago. It was at our relative low 2 of a super macro, potential inverted super macro to that left side. And in fact, it was an upside because from that relative low 2, we pushed up and you had our 3 rally that we then came down from and then traded down through that relative low 2, and we created this inverted head and shoulder structure that you're looking at here now. So let's just show it to you now in the real, in the big space. I've shown it to you on others. You've seen that. That would be your left shoulder. That would be your steep head and rising wedge structure. That was your head. And right there was your right shoulder. The interesting aspect is HVFs create zones and funnel levels, and that red line, which we called the key level of significance due to its multiple points of failure, was at the 6775 level. That's that line along the top here that you saw turn down points there, and again here. This was an excellent little shorts entries, in fact. Then the game changed. And we had a couple of upside HVF points. But before I get into all of this, we're on this 4-hourly view for a reason, because a critical moment has occurred. So I'm going to just zip through a couple of the big ones. This larger funnel area was a bear funnel, which means it should be in red, and I'm going to stop short of coloring it all in, but it ran across the top there all the way down to its triggering point along the bottom here. So these funnels were backed onto each other. So this is all key area. Right now I'm going to stop short of coloring that all in, because you don't want to sit here and watch me color in like a 5-year-old, especially as I don't do it particularly beautifully. So what's the key aspects that I'm going to be showing you? Well, there are a number of key market sniper event points. These are the key points where you get an outstanding reward breakout move, which allows you a very tight stop. Stops kill trades. Stops kill most trades. Most people don't know how to use them, and they get you out of your good trades that end up doing often what you might have thought they might end up doing, but stops got you out. There are rare moments where justifiably tight stops, providing you pick the direction and you've noticed the low volatility squeeze, will allow you extreme high returns. In other words, low risk and high reward. Now, there was actually one of them here to the short side right there. Whoop, I'm going to change that. You're not going to spot that easily. So I'm going to go slightly bigger on the sizing for this, because these are what I call the market sniper focal points. Some of which we nailed and traded, and some of which we missed. And that, by the way, is entirely natural. But the key point is you have to be focusing at the big moments. That was, by definition, a small inverted HVF. I'll come back and label it. And it was very powerful. By the way, this was another, which we'll do, when you were resisting and you were forming an ascending inverted there. This was the rising wedge that we were a little early on over here. And then we got the big rejection candle. The second attempt that should have been the second half of the bull flag got spanked all the way back, and that broke the low of that channel. That was a market sniper event. In all three of those were key focal points where you're not looking with the naked eye, you're not scanning the horizon with your binoculars. You actually have a shot in sight and you are in a high state of readiness waiting for the market to confirm direction. In all three of those were shorts. However, more recently, we set up this in this left shoulder here where we are looking, where that is a left, that was a head, and this was a very weak right shoulder. Ideally what you want for the bullish case, in other words, it didn't dip low. We got set up a little mini fractal HVF in here, and it gave you on this neckline just below a key long, a first long market sniper point, and that was a really, really powerful event. That would have got you engaged in the market far, far sooner, and that was very, very powerful. Again, you got a small wind up after this target being made. You see that? That was your neckline from your target all the way up, and you got a micro setup HVF again, and this got you in early before the 6775, before that number when everyone else. Guess what? Your execution sucks when that is happening. Absolutely sucks. Now both of those were longs, so let's get that pen back and annotate that a bit better. You were already in a bias bear here. That's slightly fat. So let's take that off. You were already in the bias bear from the macro structure here. So you're in bias bear. At this point, and you got the ascending squeeze there. That was a micro opportunity, and that was to the short side, short. Then you got the weak bear flag like rally into this resistance. Yes, the big green. Note how it had to be broken impulsively to get through. It had to be broken impulsively to get through. And you got the warning. There were the wicks. Can't do it. Can't do it, sir. Can't do it, sir. Spill. Key short moment again. Excellent period of shorting. And that was also ascending structure that gave you a high level of a spill into this. Then we got the final one here. Again, can't do it, sir. After falling out the wedge and return move that actually superseded the previous high, was a marginally higher high, bearish for us. Couldn't follow through. Marginally higher high into the big layer of zone, which was both, remember, that funnel and the key level of significance neckline for later to become, you didn't know it at this point, 6775, where you had repeated resistance. So you splash down again from here, and that's when you first started to get, and let's do this in green because it was a more bullish affair, your first clarity on a possible head and shoulders here. And that gave you your long side, long and long. That was a short, as was that short. So I'm mixing the colors a bit and it's turning into an interesting little mess. But the key point of the video now is to highlight that this was all during the bias bear period. That should be in the red box, in the red. Bias bear for this time frame under review, and the lower ones and less, down to an hour, half hour, etc. What has actually happened now is our super macro is green. That is essentially the weekly chart on Bitcoin since existence. So super macro is green. It started on next to nothing. He says that while writing in red. This is designed to be a test of your cognitive logic and not the ability to get confused. Then our daily time frame, which was long term, for crypto daily is long term, had turned red after the exhausted blow off of 20k. Long term was red. So it's like the Formula One lights. You know, if you think about that, you get those robots all the way down. Like that. It's the easiest trading you can do when every single light turns green. Short time frame, medium time frame, and super macro. So you get your right down to your trigger. You get your short, your medium, your long, and your super macro, all green lights. It's very easy to trade bullish in that environment. What we did have is that was not a green. That was in fact turned on the daily side a red light, because we were recovering from the 20K sell-off. And with that being red, in fact, even our short and medium term were turned red. That's where we were. So that was also red, red, and red. At this point from here, watch where the red line goes. This that I'm talking about was all the history there. Since then, we've been getting the confirmations with the reversal patterns. And these reversal patterns have confirmed. This little one was the first to confirm, giving you the long that succeeded and overperformed. Got to change this into green. It must be so dyslexically prompting. And that one also overperformed. It should now have made its target. In fact, it hasn't. I'm talking ahead of myself. The short there runs from here to... we would run it to the midpoint there, and then that size needs putting up there, and wait for it. It is that red line right there. So that will be the target being made there. So we continue to assume success on continuation, but price for loss in terms of sizing. So know that loss and price and size. Price is the same as size, by the way, in terms of how much you put on. Size for loss. So assume success. We can put an E and assume if we feel like it. And price or size for loss. So I would suspect, having just run this red area that I started to color in over here, that is a critical moment that could lead to some degree of rest on the market. It's done quite a lot. You've got to bear in mind it came up from 5787582 and you're now at 7786. So you've done over $2,000 up. Not bad, since roughly the 25th of June. So you're going all the way up $2,000. It's natural for us to have a little bit of a rest. You've also cleared, as I sometimes call them, the muddy field. You've run and jumped these big hurdles, aka over this green zone, hop, and then you've now cleared at this juncture this entire red zone. You've cleared that. So it's likely now that you're on the upside of it to relapse back into it, and now it turns into some degree of support for you for a while, and then you can push on out the top. However, target remains to be done, and that is up here. And you want to keep an eye on that as a level. We can go back and make sure we've got the right level. We've got a lot of lines here. These are the two purple lines, the green line, the orange line. So it's 8-1. That actually applies to that level there, 81482. So there is a target. That's what you guys all come to here. And again, I would expect post that another point of relapse. Big job done. But a mini rest here is certainly quite feasible, and a bigger rest over here is also so quite feasible. So that's the take on BTC USD on your 4 hourly. This is no longer now in bias bear territory for the sub 4 hour time frame. You're having upside targets made. If this target gets made, then that was proven to be an excellent early entry. By the way, you could have traded it on that stop, that red line on the micro inverted HVF. That level may not be seen again at all ever, or at least for a long time. And that trade would have been exceptional in terms of its risk reward. While normal inverted head and shoulders trading, your stop would have been sitting right down there. This is all unnecessary additional risk that spoils your risk to reward immensely. This allows you so much extra size for the same $100 loss, $500 loss, $50 loss, whatever is your level, when you're risking 2, 3, 5% of your account, whatever that level may be. So that's my update. That's what I'm anticipating to happen. We will be doing a free webinar. So if you thought this is even remotely useful, you will love the webinar. It's not what you make, it's what you keep. It's 31st of July. You need to go to the website. That's at www. You know that, but sure enough, and it's The Market Sniper is the website. I'm wearing my Crypto Sniper hat at the moment, but this is where the link is kept. Do the short survey. It's not for everyone trading, and we are a premium community, so you need to be prepared to invest, and you'll get a full scope of opportunity to assume the Batman suit that goes with HBF method. Initially you feel like a man standing in a Batman suit. You need to become Batman. You need time for that. This is not a half-hearted commitment that you make. Don't take it if you're just hobbyist, thinking about it, not sure really. Just come and enjoy the free news and sign off, or don't even bother. If you feel that you would like to go further, then it's particularly going to be of great value, and there will be an offer at the end of that. Okay, great. Thanks guys. Enjoy yourself. Enjoy the week ahead. That's the take. Pretty bullish, but possibilities for restful pullbacks. So one of the ways of trading this could be accumulate on dips. This is not a recommendation, by the way, but I may buy on limit markets. I will not chase at market. Generally, I don't look to do that anyway, but buy on dips, limits, with the view towards that target that we gave you, up very close to the 8148 over here, before it has a proper rest. Okay. Enjoy. Bye for now.